On August 13th, in the heart of Toronto's financial district, SmallCapPower hosted a Midsummer Cannabis investor event. Here's the presentation from Anthony Dutton, CEO and Director of Cannex Capital Group.
On this wonderful event, it's the first time I've actually spoken to this presentation, so I trip around and get on the wrong page. Please forgive me, but I absolutely agree with people like Vic and with people like Mark Gorsey. There is a huge amount of consolidation going on in this business. I'm not so sure it's going to be the numbers of LPs that are left standing, however. Our position is it's going to be the number of brands that are left standing. And ultimately, this is going to be a consumer packaged good or consumer branded goods market, and we are positioned ideally to enter into that market, and we really think to dominate. So starting off with the presentation, I'm going to go pretty quickly because 10 minutes isn't a lot of time, and hopefully we'll get some good questions after that. You've seen all these disclaimers, forward-looking statements, etc., etc. So our whole focus is to build a portfolio, value-add assets in the cannabis industry with a focus on extraction, processing, and retail and distribution. We do have some cultivation, but as far as we're concerned, cultivation is a two-part sector, if you will. It's the large commodity growers, the guys who are going to absolutely produce massive volumes on a razor-thin margin to just ship it out the door as fast as they can. The analogy that I always give is, nobody who uses or consumes Heinz ketchup knows or even cares where their tomatoes came from. Ultimately, the growing of cannabis is going to be a commoditized business, and that's not a sector that we are going to be in, except for there's always an except for. A small sector of the cultivation business is going to be for boutique, high-quality grow. The kinds of people who will spend $200 on a bottle of wine, the kinds of people who will go to a special organic vegetable store to buy their tomatoes, those are the kinds of people who will also purchase high-quality premium cannabis. So our value proposition in Washington is that we're already generating strong revenues in EBITDA. We have a very well-oiled machine, if you will, that's got 250 employees, multiple brands on the flower side, even more brands on the edible side. We have an existing pipeline of opportunity. Mark already referenced the acquisition of Jetty Extracts that we hope to close on in the next couple of weeks. That will be a phenomenal beachhead for us into California. Jetty Extracts are based in Oakland, and they've got some very exciting brands. I'll get to that in a minute. The market opportunity, I don't think I really need to talk to people as remember that. We all know it's a huge market opportunity. Corporate strategy, again, very much like MedMen and GTI and Ianthus and MPX, other companies that are executing on a multi-state play. Ultimately, it's about being a coast-to-coast provider, and because of the way the U.S. is carved up right now from a regulatory perspective, you have to go at it on a state-by-state basis. Proven board of directors and a strong management team. I'll get to that a little bit further into the presentation. So what's our strategy? Our strategy is to go after operating businesses that have raised a sufficient amount of money from sort of friends and family and are now kind of tapped out. In the US, there still is a problem with access to capital. It's actually getting better, but it still is a problem for some operators. So for example, the company that we acquired in Washington, they'd already deployed $30 million of family money at the Washington opportunity. They now wanted to expand beyond Washington, and the founders of the Washington company, who I'll talk about in this presentation, they were trying to go private equity, VC, commercial banks. It just wasn't going to work for them, so the Canadian public markets made a lot of sense. We acquired them in our RTO. We raised $48 million in our RTO, which at the time was the largest RTO in Canada for a Canadian company with a US focus. We acquired the Washington company for cash and shares, and they're now our largest shareholders and form the core of our management team as well. So focusing on all aspects of the industry, and when I should say except for commodity growing, but I put it in there including premium indoor cultivation. But again, I do want to stress, you're never going to see Cannex with 1 million square feet of greenhouse somewhere unless someone gives it to us. So here's mostly the team. Leo and Jerry are the founders of the Washington State business. Some of you have actually already met them. They were in Toronto when we did our initial roadshow. Leo's family are immigrants from Eastern Europe who came to North America in search of the dream, and they found it and founded a company called Direct Source Seafoods, which is now one of the largest specialized seafood companies in North America. There's hundreds of millions of dollars of revenue. So Leo worked there for 10 years after he graduated, running logistics, branding, and marketing, exactly what we do, logistics, branding, and marketing. Fish is a perishable good, cannabis is a perishable good, so he really learned a lot, was able to borrow that from that industry and apply it to cannabis. Jerry is a childhood friend of Leo's, and there's a tie-in further because Jerry's mother is the CFO of the fish business, so keep it all in the family. My background is public venture capital. I've been involved in aerospace components manufacturing, oil and gas, mining, technology, but my core function has always been the same: facing the capital markets, raising the cash, structuring deals, talking to people such as yourselves. My number one criteria is I don't do anything unless I've got the best operating partner. I don't know how to run a cannabis business, and Leo and Jerry are pretty good at standing in front of a room, but they're not particularly fond of doing it, so I end up doing it. So as I said, our first acquisition was the acquisition of Brightleaf, which is a holding company that owns the assets of the largest cultivator and processor in Washington State. Somebody's going to probably ask me why we didn't acquire the company directly, and that's because in Washington State, to own the license, you need to be a resident of the state. So we acquired a holding company which owns all the assets of the operating company. And when I mean by assets, I mean the real estate, the machines, the buildings, the IP, the brands, everything. There's a lot of cross ownership, so there's no chance of the operating company kind of running off and doing a deal with somebody else. We do know also that in Washington they're going to be changing the rules in the near future. By that I mean a couple of years, and we hope that we'll be able to consolidate those two companies. As we move into California, though, there is no issue without a state ownership, so it'll be less of a challenge there. So in 2017, 8,000 kilograms of production. I think Canopy did 9,613, and we would have been number 2 if we were in Canada. This year we should hit on 18. Our sales were a little bit higher than that in 2017. They were about 27.6 million. Very, very strong role position in the Washington market. About 70% of the Washington market is flower, about 30% is edibles. We are tending more to the derivatives edible side because we think that's where the market is going. So we're about 55% flower, 45% derivatives. And as I'll talk a little bit more later on in the presentation, we got 320 SKUs going across candies, chocolates, cookies, vape pens, tinctures, anything you name that's got a cannabis derivative product. So in Tumwater and in Elma, we've got two 60,000 square foot buildings with 30,000 square feet of canopy in each. Also in Tumwater, we have a 40,000 square foot processing facility where we have 3 distinct and different processing facilities. And we also have 3 kitchens where we produce a variety of different products, and each kitchen is specific to those products. So here's an example again of our brands. These are the #1 selling edible in the state. They're called Marmas. They're really gummy bears, but they don't look like gummy bears because in Washington you're not allowed to sell things that look like gummy bears. They can taste like gummy bears, I guess. So again, you know, we're very, very focused on brand and how we differentiate ourselves from the other companies. Here's just some examples of some of the the yields and the production. One of the things that we're enormously proud of is this, which is virtually unheard of. We're doing over 400 grams a square foot right now in our indoor grows, which is pretty darn good. And that is again the premium. I'm going to stress that's a premium flower. For all of the products that you saw on the previous page, the derivative products, those are typically made from trim extracted into oil but we buy the trim from other growers in the state. We're buying trim for 15 cents a gram, we're buying full flower for 25 cents a gram. We're buying product to put through our extraction for a lower price than we could actually grow it. So phase 2, we're moving into California. We've already disclosed this. We've signed a binding letter agreement with Jetty Extract, which is the 6th largest extraction company in the state. It's got the 5 top selling PAX SKUs. It's the #1 selling edible on Ease, which is, for those of you who don't know Ease is essentially like Amazon for weed. It's the largest delivery service in California. It's a phenomenally successful distribution play. But Jetty are perfectly positioned for us. They started off in Southern California, in San Diego. They moved to Oakland a couple of years ago, so they've got a foot in kind of both states. California is a different state, a funny state. It's sort of Northern California is one state, Southern California is another, but we've got a foot in both states. We're doing over $1 million a month right now from Jetty, profitable, and they did all that simply on $2 million of paid-in capital from friends and family. So they are a perfect example of an acquisition target for us. We can provide them, we already have provided them with $4 million of additional working capital. And they've got a strong and loyal brand following, albeit a very small niche because nobody has a dominant brand in California. But as anybody knows who follows the branded goods market, whether it's chocolate or flowers or shoes, it doesn't really matter. It's usually 15 to 20%. The top 15 to 20 producers control 80% of the market. And that will be exactly the same in the cannabis sector. Maybe not next year, but in 10 years from now, those will be essentially the numbers, because there's always the numbers in a consumer branded goods play. We think that Jetty has got a phenomenal opportunity to be that brand in California, but also outside of the state of California. I've said publicly that we expect to be in a couple of more states by the end of the year. We do. So, right now, if you want to be very kind of cynical about it, we're a single state asset, Washington, in a mature market, but we are moving into California very, very soon, and we expect to be in 2 other states by the end of the year. So just a very quick snapshot of them. They're 1,200 square feet in Oakland's green zone. They got 60 employees. They got 5 different SKUs. They have the highest quality extracted oil that we can find anywhere in the U.S. And most importantly, dovetailing back to what I said earlier, they do not have any cultivation, and they have no plans for any cultivation. 90% of the cannabis consumed in the United States historically has been grown in California. There's no need to build more cultivation facilities. We buy from Mendoza County, from Salinas County, from Humboldt County. We've got great growers that have been growing weed for decades, and they sell to us, we extract it, we turn it into product, and off we go. One thing they do have, which is a bit of a sort of a diamond in the rough, is they have a distribution license. Those are hard to come by, but Jetty owns one. They self-distribute, as well as doing what they do with packs and with ease. So we're hoping over the next 24 months to really build out the distribution side of their business as well. So here's some example of some of these brands that are already being produced in Jetty. And again, when you have a multi-state platform, the whole play here is what we call cross-licensing. In a perfect world where you could transport product across state lines, you just have a giant factory in Nebraska or something making all of these brands, but you can't, because you can't ship it across the borders. So what we will do is we'll take these brands, we'll license them to ourselves effectively in Washington. We'll take our Washington brands, we'll deliver them into the formulations into Jetty's facility in Oakland and produce them under license. So it's just a way of expanding our brand reach across multiple jurisdictions without having to ship the product across the state line, which as of today is illegal. So again, California, giant market. We really wanted to be in that market first, not only because it's a big market, because it's going to be a very important market from kind of an iconic perspective. You think of California, you think of the Golden Gate Bridge in Hollywood and so on and so forth. Global brands that dominate the global cannabis industry, in my opinion, are going to have their roots in California. So we wanted to be there first and early and hit hard once we got there. So what's the opportunity? Well, the United States has still got massive upside, so we're primarily focused on the U.S. Canada, I believe, has still got some great niche opportunities. One of the things that we're very, very good at is extraction and processing, and I think there's an opportunity for us to bring that into Canada in some way, shape, or form. I haven't shown a map of the world, but we all know a number of companies are already expanding into Europe and overseas, and ultimately cannabis will be like any other CPG, it'll have global distribution. So again, I don't want to take too much time on this particular slide. I think everybody who's in this room knows why we're interested in cannabis. This really is a once-in-a-lifetime opportunity, though, and I can't stress that enough. It's not like any of us need to go out here and prove that a market exists. People have been consuming cannabis in one way, shape, or form for centuries. So big players coming into the market. Everybody probably has their own story. The one that everybody in this room will be familiar with is Constellation's move last year. We've been approached by a number of drinks companies. One of our key shareholders actually is a founder of a very large drinks company in California. We were very excited about the potential of the drinks market. There really is no drinks market yet that kind of mirrors what people are hoping to see, however. It's like Monster Energy or Red Bull or vitamin water. None of those exist within the context of the cannabis product range. Somebody's trying to find it, and somebody will. Hopefully it's going to be us. This is another fascinating part, and I won't carry on too much about this, but whenever you've got a $50 billion a year business, you got a whole host of ancillary businesses. And one of the companies that we've talked to already is Steep Hill, one of the biggest companies in the US for testing, that's going into now testing as a data play. Real estate, if anybody's familiar with IIP, which is Innovative Industrial Properties, it's the world's first cannabis REIT, trades on the New York Stock Exchange. there's a lot going on in this sector that's this about more than simply growing cannabis and extracting it and selling it. And we were talking at lunch when I was presenting at Mackey about companies like Coca-Cola, Frito-Lay, and Pepsi and others. And the reason those guys dominate what they do is because A, they've got a product that people want, but probably more importantly, they apply technology and logistics and this critical mass to making sure that they're constantly the #1 company. So the comparables, I'll leave this page with you to look through the numbers yourselves. We're measuring ourselves on an EBITDA multiple. We think that we're certainly a diamond in the rough. Not a lot of people know about us. We have not been doing a lot of promotion. And the reason for that is that on the 28th of August, our year-end financials come out. And also we will be closing the Jetty transaction in 2 or 3 weeks. So we really wanted to wait until we had something to really, talk about. And the financials in particular, I think a lot of people are going to be pleasantly surprised when they read what they have to say. So here's the board. Myself, obviously, Leo, who is the founder of NWCS and is now our Chief Operating Officer. Tom Peters is a very high-profile investment banker with his own boutique firm in San Francisco. Jerry is employee number 2 of Leo's Cannabis Company and now sits on our board and is also our exec VP Biz Dev. Greg Marshall is in New Zealand, used to work for Bain Capital. He was very helpful in the financing. He brought $17 million to the $48 million. Roman runs the family seafood business. And Dimitri is a tax accountant that we rely on a lot, actually, in New York. There's a lot of cross-border tax issues that we're constantly dealing with. The management side is pretty lean. I mean, Vancouver is just myself and 3 or 4 other people. Cannex, in many ways, is just like a Canadian public holding company. All of the real action happens at the operating levels. So we don't need to build up a huge presence in Vancouver. We're never going to have 30, 40, 50 employees in Vancouver. It will be not happen. One of the companies that I took a very close look at when I started Cannex was a company that I'm sure some of you guys might be familiar with, Premium Brands, which is a well-known Canadian company that owns, I think 75 or 80 very quality premium brands in the food market, and their office in Vancouver would fit into half this boardroom. Capital structure, pretty straightforward, so I don't need to, explain it to you. It's all there in black and white. We did our financing at $1 with a half unit at $1.50. We rallied up to about $1.90 in the first week after we traded, then it slowly drifted over the summer. Summer doldrums, lack of news perhaps. People want to see us in more states. There's a whole bunch of reasons. Ultimately, though, I think at 90 cents you're getting, one of the best entrees into an emerging multiple state player with operations, revenues, and profits. So. Thank you for that. I'm probably over 10 minutes, I'm guessing.
Oh, just slightly, but that's okay. That's all right.
Apologies. So if there's any questions, please fire away.
So you mentioned Teva in there. What are they investing in right now? Is it the pharmaceutical company?
The one from Israel.
Yeah.
Yes.
The Israeli company. Yeah.
Yeah. No. So I don't know them personally, so we just put them up there as a reference. But I believe that they're investing in some technologies which match genetic profiles of patients to genetic profiles of particular cannabinoids.
Okay, so they're going for molecules.
Yes.
Okay, fair enough. Okay, thanks.
What year did your company start? I didn't see.
Well, Cannex started late last year, or it's actually early last year, but the engine of the company, which was Northwest Cannabis Solutions, started in 2013 when it was only medical licensed in Washington, and then 2014 when it went from medical to rec. That's when the recreational side started.
And that was in Washington.
In Washington.
Yeah.
So Leo, whose family, are very wealthy. Leo had been working for his dad, fish company, for 8 years after he graduated, and he said to his dad, "Listen, I really want to go into cannabis in a big way," right? And his dad said, "Okay, well, write me a business plan." So he wrote his dad a business plan, and his dad lent him $30 million. So that's the capital allocation. Not many fathers are able to do that. And so, the reason that they were able to dominate Washington so resoundingly, and they do, they've been #1 every single month since they've been taking stats, is because they had access to capital. But Leo's dad drew the line at saying, "I'm not going to finance your growth into California, to here, to there, to everywhere else." So that's, I just happened to meet him at a very fortunate time for both of us.
I think like this
What
is
are the margins in the edibles versus oil / versus dry flower?
Yeah, so the dried flower margins are anywhere from sort of 30 to 45, and then on the edible side, much higher, 70 to 75, even 90. And in California, we expect to see those margins even improve because we can use much more automation on the production of a wide range of derivative products. So anybody that is interested, I can send you a video of our facility in Washington. We're quite heavily invested into automation, but some machines we just can't justify the expense because they're never going to amortize over a lifetime of a population of 6 million people. In California, where you've got 30 million people, you know, we're already looking at some pretty sophisticated machinery for jetty, for example, which will, you know, allow us to decrease our margins and increase volume significantly.
Okay, we're going to wrap it up there. Thanks, everyone. Thanks, Anthony.
You're welcome.
Good stuff.
To learn more about Cannex Capital Group, be sure to check us out at smallcappower.com.